Good evening, it's the 11th of July 2023 and this is my trade recap. On my screen at the moment you can see my MES chart. If I open up my trading view chart, press the wrong button, trading view, I'll just move it across, here we go. So trading view today, you can see the levels I was watching. I was watching this area around here, which was 44.40 for a possible bounce. It had already bounced in the pre-market, and we came close after the market opened. So technically, that could have been a valid bounce. I usually only like taking the first bounce off a level because that's usually the most powerful play. I also identified this higher risk area of 44.66 and a full size, a less higher probability trade at 44.76, and that was basically based on this pivot here for this higher probability play, which it touched today, went spot on, and the 44.76 area, this area here I was watching, is based on the bottoms of this candle going back 1, 2, 3, 4, 5 days, and then this area of congestion where you can see the bottoms of those candles converge with the tops of those candles, and it's also the bottom of that candle. And I'm pretty sure if I go back further, there's other areas which would match up, which you can see there. So it's not just a random place I select. So that's the 16. So there are the areas I was watching: 44.66 and 44.76, both for rejections, and a bounce at 44.40. So going back to my broker page, and this is Ninja Trader. I use Apex funding for my futures, and it's fully funded, and they basically pay for me to trade. So I took my first trade was in the pre-market about 9:20 it was, and what it was, I was watching the volume. You can't really see the volume very well here, but before all these candles were on this screen, that volume was as prominent as this volume you can see here. But basically what I was seeing was increasing volume and then decreasing volume. You can just about see it there. So the volume increased on that rally up, and then it just pulled back and it decreased and it went sideways, and usually that's a sign of weakness or a change in trend. And then I saw this topping candle and it couldn't make a new high, so on the break of that candle I went short, and we saw a nice increase of volume. So as that sold off, volume got higher, and then obviously the market opened at 9. I should have got out there. That touched the 50 moving average as well, so that should have been my out area for good profit. But I didn't. I held it because I thought we were going to pull back up and maybe come back down again. And so I got out for break even. It was slightly better than break even, so it was a small, very small marginal profit, and it did exactly what I thought it was going to do. It broke out and then rejected it, and I probably should have held it, but I don't like trading the open, so I'd rather err on the side of caution and just get out for break even, because it could have just ran up like that and I could have been a big loss. I don't have a physical hard loss. I use a mental stop loss, so that while I'm watching the trade, if I get, especially on the open, if we get a big wick and it comes back down again, then I won't just get wicked out like many people would have done at this point. So, and I'm happy to take a bigger loss if the candle closed up here, knowing that majority of the times I won't take a loss because it'll just wick up and come back down. So that's the reason I use mental stop losses. Obviously if I walk away from my machine, then I may put a stop loss in, probably not that close. I'll probably put a stop up here somewhere as a protective stop, just in case my machine breaks down or I can't come back to the screen for some reason. I've got a stop which will at least protect me a little bit, rather than having no stop loss at all and you see it just running for the rest of the day up. So anyway, so I was out slightly better than break even there. Then we had this sell off, and I wanted to do the break and retest of the VWAP. So the white line is the VWAP, and so I got in just there, and I think I got in there. I got in too early. That's a mistake, but I stayed in, so my average price was probably about here, and then my out was the top of this moving average, and it didn't quite get to the top of it, and I lightened it a little tiny bit there, and then I saw it reject, and so I added it back in again. So I was no better off than these ones here, but my new average price was about here. My new average price was actually the VWAP, and then as you can see, we had this big nice bar down. So the break and retest was on volume as well, but because it's opening volume in the first 10 minutes of the day, volume is harder to read, so it's more of a look at the price, watch it retest the VWAP and break down. So that's more of a less technical trade, more of a gut feeling trade based on the break and retest of the VWAP, and that's good. So I got out there and got out there, and I was out, so I was up, nice profit, nicely in profit by this point. I then thought I'd do another break of the retest here. As you can see, I got in there and I didn't like it, and I saw it come back up, and I got back out of break even, so not a loss. So as it is, I'm still up, so I got a break even trade, a good trade here, and another break even trade. And then a bit later on, I saw it rally up, and I didn't really identify this movement, higher high, higher low, higher high. Technically it's a lower low, but I did try a short again because I thought it was going to come back down, and I was watching on volume. Volume was reducing at this point, so it looked weak. So I got in there, and it came down. I was waiting to get out on the VWAP, but it didn't quite get that far, so I got out here again, better than break even. That's my in, that's my out. So more of a scalp play, and so that's another trade, another winning trade, but only a scalp. I wasn't really in it to hold because I was going against the trend. And again, I was watching this top here, and I was watching volume, and that's the only reason. What made me nervous was obviously these two bottom tails, which normally suggest we're going to go up. So that was my last trade of the morning, and then in the afternoon, after 12, we had this big break up. It's a nice play, and it was running into some levels. So let's just go back to my trading view chart. That's where I keep my levels. I basically watch this chart. Well, we said good 5 minute. So I'm on the 5 minute chart now. So my next trade was basically off of this level, and it's a level I identified in the pre-market. And so I had an order there, and I had a couple and an order up there. It's a higher risk play as well, and that would have been my stop loss had it got that far. It was a higher risk play, and I didn't want to go in too heavy, so I gave myself an order. So I got in for 2 contracts, I think it was, at 75 cents or $1 below my target price, and it touched that area and then it rejected down. So I got out on the VWAP, I believe, and that's it. So that was a good trade, and especially this nice big power candle down as well. So that's a good trade. And I was done for the day. I was up quite well, and because I use a trade copy on my Ninja Warrior account, all these little tiny trades are copied onto 6 other accounts I use, and so a small profit on one account is a small profit on all accounts, but it combines into a decent profit on all accounts. So, and that's the reason I use Apex Funding. And if you're interested in Apex Funding, there is a link below in the description, and you can get up to 80% off or sometimes 90% off an evaluation account. Okay, so I took one more trade, and it was up here. So it's this level I identified, 44.76, this area. And so I waited. I wasn't going to take the trade. I was watching it because I was up for the day and I wasn't going to trade, but I was watching volume. I saw it rise in volume as we were coming into here, and then the next candle it put in a topping tail, and it had a lower volume, but I wouldn't have known it was lower volume at the time. It's more based on the volume on the 2 minute charts. Let's have a look at the 2. So that's a better so the 2-minute chart. So I got in, we came up, we hit this high, I saw it as a fake breakout, and as it came back down to this candle, that was my in. I just took 2 contracts at that point there. So I was in there and I got out, it was on that moving average, and on the 5-minute chart it would have been there. So my out was on that just before that moving average. So it's just a very quick scalp, in there, out there, and that made me another nice little bit of profit for the day. I said only 2 contracts, wasn't a massive amount, but like I said, spread over my 6 different accounts. That's a good trade. And again, identifying reducing volume, and that's showing weakness at the end of the day. So overall, good day. Every trade bar the first couple of the day were based on volume and volume analysis, and for that what I mean is I'm watching areas of rising and lowering volume, and I'm looking for anomalies in the volume candles. So here's a good example of an anomaly. So on the 2-minute chart, we've got, here we go, so there's a good one here. So on the 2-minute chart, we've got this rise in volume coming up here as we're now pushing up. It's a nice little pullback, you know, nice. It's a valid entry just there. So I didn't take this trade, but I know one of my colleagues in the trade room did take it. And then we had this small candle here on larger volume than the previous candle, so that's an alarm bell already. So even though you've got increasing volume, you've got this really small candle, but it's a fraction of the size of the previous candle, but it's on more volume. So that's a good entry point there, because you know then it looks like the market's going to do something different, and so probably a break of that candle would have been a great in, and that's based on volume. And you saw rise in volume then, and then we went sideways, and you look at these 2 big volume bars. So this volume bar here and that bar there, they had quite large volume, and then the anomaly is this bar here. So we had an equal sized bar, you know, roughly the same size as of the previous bar, but the volume was much less. So this volume bar here was half the size and below average, and that generally indicates a weakness or a change of trend. So that's an anomaly. So that's when alarm bells start ringing and you keep an eye on it. So if you're in for the long, this long here, or maybe you got in down here, so that should be a sign for you to get out. And ignoring this bit here, you don't know that at that point. You just need to trust your gut and go with what, you know, you use volume analysis for a reason, and that's when you want to get out of it. So then we had obviously increase in volume, which was the increase in volume here. And was there any other anomalies? You probably, no, not really. In fact, an anomaly could have been that bar there. So you've got this bar, these 2 bars here on ultra high volume, and then you've got this bar. Let's do that again. So you've got these 2 bars on ultra high volume, that one and that one, and you've got this small bar with much lower volume as well, below average volume, and it's an indecision bar. And then the next bar, do you know what, it's probably okay, thinking about now, smaller bar, smaller volume, increased volume, yeah. So you've got, the anomaly is this bar really, so it's something to help find a top. So you've got this bar here which is smaller than this bar here, but you've got increase in volume on the second bar. So a smaller bar with higher volume than the previous bar will show that there are probably more buyers or more sellers in the market. In this case there was more, we had more sellers denoted by this red area and a smaller green area. And so the top and tail also is a warning sign. So when you see something like that, that's when alarm bells need to start ringing. So top and tail, anomaly in the volume, you know, smaller bar but higher increased volume. That means there's indecision, probably buyers and sellers are fighting, and the sellers obviously won that fight. And that's about it really. There's nothing else. We're in the post market now, and it's just going sideways. And we've got CPI tomorrow morning, so we may see a bit of a sell-off or big push up. That's at 8:30. Anyway, hopefully you had a good day trading, and I will speak to some of you tomorrow. Good night.